Market observations, Wagga Wagga in New South Wales. Now before I get started in today, if you do like this content, you would like us to focus on any other areas, please, it'd be great if you could join the conversation below this video. Talk about the other areas you might be interested in. We can go away, pull the research for that area, look at what we think about it and create another video on this channel. If you do like the content, it would mean a lot to me if you were to subscribe to this channel. Hit the bell icon so you are the first to be informed of any new videos that we do release, and obviously like the video. If you do like the content that we're putting out, it does mean a lot to us. We get a lot of positive feedback in the comments and it does keep us really focused on putting out more content. In terms of Wagga Wagga, it's been on the lips of a lot of investors across the country now for a few months. Okay, I've seen it. The news cycle, the investor news cycle has been proliferated for Wagga Wagga now since probably September of last year. Maybe August was the first mentions I saw it in property forums, larger buying groups, etc. Today we're investigating, is it a good time to buy in Wagga Wagga? Is it a good opportunity to buy here? The when and the where. So let's dive right in. As we always mention, we have this slide as a reminder. Property investment is a science. Okay, we look at the demand side of the equation and the supply side. What we're trying to do in this first part of the investigation is determine the overall opportunity of this market. How does Wagga Wagga compare against Timbuktu or Alice Springs or Sydney or Blacktown or Northern Beaches or Toorak? Okay, we're comparing apples with apples, and to do that we look at the local government areas. The reason why we look at local government areas and not other geographies, other snapshots, other boundaries, is because local government areas have consistent local policies. Local councils do the same thing across all suburbs in that area. Okay, you have the same council making the same decisions, so the area of impact is the same. Local government areas, generally the suburbs in those areas trend in the same direction at the same time. So it's a very important point. There is rhyme to our reason, but in this analysis we are determining, is this the right where to invest? Is the opportunity here large enough to justify our attention? And then once we've determined that, second to that, we look at, is it the right time to be taking this opportunity off the shelf and putting it into our portfolio? So in this analysis, we are looking at the overall opportunity. Firstly, we like to look at employment, industry. Some big ticket items here for Wagga Wagga. My favourite, healthcare, social services, public administration, government services. We have a bit of retail and trade, education and training. A nice, very strong, diverse, we've got 4 out of 5 stars on employment diversity, and even more important to that, the largest employer is health and social services. Second to that is government, public administration and safety. That's about as good as it can get for a regional centre, and you'll see in a moment that is flowing on to some of the recent projects that have been completed. It's not going to be featured on the next slide, but some of the big ticket items is a large base hospital upgrade in the last few years. Okay, when we see that occurring in these regional centres, it is one of the strongest growth drivers that our algorithms have seen to drive demand and growth. Okay, the last time we saw it en masse occurring before Wagga Wagga in the similar area was the Bendigo base hospital. When that was built, that caused 2 or 3 years of very strong overperformance. We bought many properties there in 2019 as an example. Wagga Wagga, it was a couple of years later. The government has state level population targets. They draw a big red circle around the parts of the state they want to draw people towards. Okay, in this particular case with Wagga Wagga, they wanted to target 150,000 people living there over the next 30 years. There's about 70,000 living there now. The first thing they do when they are rolling out these state level plans is they build a large hospital. And the reason why they do that is because that then drags and draws the surrounding population, hundreds of kilometres away from Wagga Wagga to Wagga Wagga. As regional, rural farmers, etc., they're ageing. They do want to be closer to these health services. When they build these localised base hospitals, it's as if the government is telling them, as you age, move towards us, jump into, you've got the services here, we are making this a localised hub. So when you see these cities, they really do undergo a reconnaissance. That's what we have seen here. Now that hospital is actually really kicked into gear. It's now the primary employer in the area. Good, strong income growth for a regional, average overall, but for a regional centre it's actually quite good, strong capital income growth. And this is a bit of a funny one. The commute time in this area is very high, but you have to remember a lot of people living in Wagga are travelling a lot for work, 40-something kilometres every day, because they're going out to neighbouring farms, wind, solar projects, energy projects, even mining. They are travelling out from Wagga each day. A lot of people obviously living in Wagga and working in Wagga, but then there's a lot of employment in the surrounding districts, as we'll see in a moment. Unemployment is very low for a regional. It's around the national average, but very low for a regional. Extremely strong employment, and we can see here number of people is growing steadily around that 40,000. There's about 70,000 in the wider area. The new project list, a huge amount of per capita spending in the Wagga Wagga area. You compare this to places like Toowoomba, Hobart. Wagga Wagga, surprisingly, has far higher per capita spend per person. Okay, it's not up here with the nation's strongest, biggest hitters, but remember a lot of the dollars being spent around these areas is around mining. So it is very high. Let's dig into this a little bit deeper. Solar, renewables, solar farm, highway upgrades, Commonwealth infrastructure projects, so that's another highway upgrade. We've got special activation precinct, so that's now an interesting one around here, around a commercial district, etc. Industrial, retail, hospitality, it's a hospital redevelopment. A Department of Health, I'm not sure why it's been categorised as that, but it is a hospital upgrade in the surrounding area, not right in Wagga, but the surrounding area. The big, great spend per capita, but as you're sort of well aware with some of the previous videos, a lot of this spending is not creating a huge amount of ongoing employment. A $1 billion solar energy project, it's wonderful in the construction phases, but as we know, as an investor, we want long-term impact around employment, and it's probably not going to be employing that many people on a long-going process. So the actual story here in Wagga, even though we have a lot of spending on the horizon, like the Far North Queensland stories, not a lot of it is going to translate into above and beyond extra demand for housing in the future. And that's what drives property prices. So we do need to discount a lot of this, okay? The story that justified our purchase into Wagga Wagga happened 12 months ago, 18 months ago, and that's going to be a theme that's going to be coming out. That was around the large hospital upgrades and public services upgrades that have been already put into the Wagga Wagga market. They've already been completed. Ongoing, a lot of money being spent in Wagga Wagga, but it's not going to have a huge direct impact of housing. But overall, we know the state government has this doubling of the population over the next 30 or so years. So there are going to be a continuation of these projects coming through the pipeline. So still very positive signs for Wagga Wagga in terms of investment. Very accessible, all the key big ticket items. We've got the Bunnings there. Everyone loves a good Bunnings in these regionals. Okay, that is in Wagga Wagga. It is large enough to have this base level of social services. It is a viable local hub, and everything is very accessible as you would expect in these small regionals. Charles Sturt University just up there to the north. Growth rate, projected population growth rate. Now it has been low in recent times, okay? But we do project it's a positive net gain from COVID, and from here on in, we have commissioned private research within Ripehouse a couple of years ago. We worked closely with Bernard Salt, a demographer, futurist, and we have projected population growth out to 2.6% from 2022 to 2024. Okay, that is good. On a national level, for regionals, that is strong. National level with capitals included, it's average, but for a regional the size of Wagga Wagga, it is very strong. Okay? Overall, the size of the opportunity, the projected performance into the mid to long term is very good in the top 83% of areas nationwide. Some of the considerations are, it's just what has happened recently. It's not on our current list of forward-looking projects, but it is the large public infrastructure projects like the hospital and all of the surrounding areas that is going to be positively impacting this. I don't mention the Inland Rail project in these slides. It is a mass nationwide, or almost nationwide, project, a very large project, very long timeline. It's probably too large to include in these slides. I do focus it in onto the LGA, but there is the Inland Rail project that would positively impact this this city very strongly. That is a big asterisk against Wagga Wagga, for Wagga Wagga, sorry. But overall, knowing what I know about the hospital upgrades and all of the extra things that have been happening there the last 12 to 18 months, Wagga Wagga is set for a very long burn. Okay, there's a lot of opportunity occurring here, and it really is undergoing a reconnaissance, a very strong change. Overall, very good in terms of the overall opportunity. So the where is good. Now let's have a look at the when. Is this the right time to be buying in Wagga Wagga? Days of remaining supply. It's not telling us much here. It's still a very heated market for houses. Okay, nationwide there's a lot of heat here, but it is steady. So we're not getting much information from there apart from the fact that it really is a seller's market at the moment. Days on market. Now this, it might seem quite subtle, but it did tighten up all the way through last year. And then as we came into Christmas, we hit a bottom and days on market has started moving back out again. So this is a very subtle trend here, but I have skipped ahead. I have looked at the other slides and it is consistent with the story. We have seen a reversal in days on market. So remember, days on market is a child metric. Days of supply is a parent. It's a derivative. Okay. Days on market may be indicating that some of the heat is coming out of this market. All right. So days of supply didn't. But days on market may be indicating we're on an upwards trajectory. Let's see if it's confirmed. High competition in this market is above 20% of properties selling within the first week of listing. Okay, that's what we determine as a high competition market. This was high competition back here in the middle of last year. Okay, this was when things were really starting to coil up in the market, really starting to bind up. We can see here in the last 3 months, in particular, last 2 to 3 months, the heat has completely dissipated out of this market. Okay, it's completely dissipated. And that's also been confirmed with days on market, just starting to creep back up again since Christmas. And the percentage of properties selling within that first week has completely dissipated. All right, so we are starting to see this peak emerging within this market, or at least a short-term peak. This is once again now confirmed by the blue line houses, where the average discounting amount early last year was at about -1%, and it went up to 5%. That's an extremely heated market. Okay, that's when really, sales agents don't know what's going on. We'll put our finger in the air and see what it sells for. Properties selling for 5% above asking price on average. Okay, extremely heated market. You can see it really did heat up, and now the heat has come out of the market the last 3 months. So we are starting to now see this has all been confirmed. On the buy side of this market, very importantly, we have hit a peak. Is it, it's a short-term peak, but we don't know how long now the consolidation phase will be after this peak before the market starts really heating up again. So, these are all confirming that the peak of the market was around March, and now we are in a consolidation phase. Let's continue down this journey. Stock inventory, it's starting to gradually widen. It is a very, this is units. I like to look at the red at the houses. You can see that red is soaking down here into houses, and they might be sticking around for a little bit longer. Why would this start to be occurring? On the other side of this, we've determined the where, but is it the right when to be buying in this market? All right, let's jump into the rental side of this market. Days on rental market. It has popped up again in recent times. This is confirming that the heat may have dissipated from the rental side of the market as well. Rental listings, we have seen these spike back up again recently, but we are at very low, under 1% vacancy rates. So when things are dancing around 0.5 to 1% vacancy rates, we just consider this as essentially no housing available. It's really difficult to rent houses within a week or two, of the listing. You've got to have opens, etc. This is about as low as vacancy rates will ever go, extremely tight on the rental side. Now, this is an extremely bullish sign. We've gone from $400 a week up to now $475 in the space of 12 months, right? Nearly 20% rental growth, and it's not slowing down. All right, so even though the buy side has hit a short-term peak, the last 3 months the heat has really moved out of that market. The rental side of this equation is really pushing forward. So it's as if prices got too expensive around here, and then people flipped over to the rental side in an instant, which they do, and now started to push the rental side of the market. So in these areas across the country that have just, extremely good opportunity, in the top echelon of opportunity, the rent to buy side flip-flop occurs very quickly and sometimes multiple times throughout a property cycle. So in this case, there was a flip to the buy side early last year, which I'll show you, and that is now flipped back over to the rental side of the equation where people are preferring to sign a 12-month lease instead of buying. Okay, we have to then sort through that rental side, that demand, and then as rents start pushing up once again to be too high to justify renting, people will flip back over onto the buy side. So how long will that take? Well, let's investigate that in a moment. Yields, we would expect this. Yields have been decreasing as prices have been really pushing forward, which you'll see in a moment. And as pricing has come off the peak, which I'll show you in a moment once again, and rents have still kept powering forward, yields are recovering. We probably need to see yields coming up towards 5.5% in this market before we start seeing that shift back over to the buy side. So this gives us a lot of clues. How long will this consolidation occur? How long will this shift onto the rental side of the market take to play out? Well, probably until yields recover up to over 5 to 5.5%. When they do, we know traditionally this is now too expensive for people to rent. People will then move back over onto the buy side. That is the signal in this market. That is the tolerance. Okay, so that's probably going to be an indication. How long will that take to occur? Could be 3 months, could be 3 years, could be 7 years, a full property cycle. Okay, we don't know yet. My gut feel is in a market like Wagga Wagga with just the extremely strong and bullish government spending and, complete upgrades to the area, it's probably going to be more like 12 to 18 months, not 3 to 7 years. Between that sort of 1 to 2 years is where we'll be sitting. Because asking prices have been going through the roof, and more importantly, combined with the discounting amount at 5%, sales prices have even been further amplified. So look at this here. We had an area that grew about $10,000, $20,000 over the period of 3 years. Okay, if you're sitting here in 2018 in Wagga Wagga, you've got sort of 2 or 3% returns per annum. It's a very poor performer. You've had now hospital upgrades being completed. You've had a reconnaissance of the area. You've had a very strong change in the local environment, and it's drawn people to the area and increased their willingness to pay. The prices have shot up since this entry point. There was an entry point here, a very specific one in September of 2020. We know this down to the month, and I'll show you in a moment, but this blows the concept out of the water where you hear investors going, oh, it sounds like a great area. What's it grown like in the last 3 to 5 years? And they determine whether they're going to buy in an area based on its recent price performance. We've proved with our algorithms and what we do, there is an inverse correlation between previous price growth and future price growth. That means that as prices grow, generally they slow down. As they are dormant, generally they increase and they launch off. So when you target these areas, you've got to find areas that are generally dormant and there has been a net and dramatic change to what is occurring. The overall opportunity changes, okay, and then you have a launching bed. This is hockey stick growth, guys. This is what we're looking for. This is not a gradual curve, something that's confused and it's just sort of kicking along. This is a gross net change in a market. And this is the type of results that you can achieve. 350 entry points up to $550,000 as a median now for the local government area. Extreme growth. The reason why I'm saying this is it does confirm of what we've been seeing, right? This is the patch here where we're at now, 2022, where the market has started to slow down. The buying signals are saying now, this price is a big handbrake on demand. And it's probably no better handbrake on demand than increased price. There's less people that can afford to pay this in Wagga Wagga. And so all of this growth has push. The market has now run out of steam. All right, we've seen that based on a number of the variables. The rental side of the market is benefiting from this. Okay, people are now starting to go, it's too expensive for me to afford to buy here now. I love the area, I love the new job. I'm moving over to the rental side. So we've seen that now on their rental equation. As yields recover back up to that 5.5%, how long it takes, I'm not sure, but as they do, then it's starting to become more expensive to rent in the area comparatively, and they would be moving back over onto the buy side. It's that simple. Not the time to be buying in Wagga Wagga now. It was the time to be buying there 12, 18 months ago. We wanted to be buying here to here. You know, this was when there was an opportunity to enter the market, and then we have got all of this upside, this growth. It's a perfect example, a textbook example of a buying window. This is a consolidation phase, a buying window, a market upswing, and a market peak. Okay? We want to be buying here, not here or here, well, around here. We can't be perfect. We want to have an entry into a market. We don't want to be buying throughout this major upswing. Now, have we been buying here? Yes, we have. All right? So Wagga Wagga is a market that we actually purchased in. These are all the acquisitions that we have made in Wagga Wagga. You can see here some in Mount Elston, Tolland, over into Glenfield Park, Coringal, into Lake Albert. All right? So there's been a very good sample of properties coming into the Wagga Wagga market. When did we purchase them? Well, this is all the data. We track our purchases very intimately. You can see here some of the earliest entries into this market were late 2020. And we exited this. So this data is up to February purchases. I had Eric pull this into February. Some of the latest purchases here were, what's this? November 2021. So let's go back to this chart. We bought 28 properties there. You can see some of them here, 222,000. We bought some unit blocks and things here, some very high yielding unit blocks up here at over 500,000. Most of our entry points were around that 300 to 320,000 price point. Okay. When did we buy? The first ones were around that October 2020, and we stopped buying mid 2021. So we stopped buying here. Okay. This is where we entered into this market, and we have positioned ourselves from 450 to 550,000 in growth, 20% capital growth. Some clients had 30%, some clients had 35 to 40%, other clients had 20%. Is it the right time to be buying there now? No, it's not. We've seen those reasons why not. This is the entry point, okay? And we've demonstrated, we've put our money where our mouth is. We backed ourselves to buy here, right there in this market, and we followed the upswing through to here. If you were to buy in Wagga Wagga, this is probably more of a general statement. As I've just mentioned, we've missed our buying window in Wagga Wagga. But if we were to buy in Wagga Wagga, it's a funny city. I'm just going to make some quick points here about the geography of it. I had an interview with Bernard Salt recently, and he uses the expression a splattered egg. You know, you drop an egg on the ground, you have the yolk in the middle, or fried egg, sorry, is his expression, have the yolk in the middle and the white of the egg around the edge. He uses that expression to describe Australian cities. Wagga Wagga's not. It's probably like my eggs, a little bit scrambled. You've got the CBD over onto one side of the city, and you have the population over here. So we have to be very careful about how we invest in these regionals, because they only usually have 2 or 3 layers of suburbs. You usually have CBD in the middle. You don't touch the CBD, it's too high a density, too varied property types. The inner ring is usually the higher socio, then the middle ring is sort of the good buying zones, and then the outer ring is low socio that you don't touch, and it's sometimes exposed to supply risk. It's a little bit different here with Wagga. You've got some low socio through the middle, low socio up here, but then you have some better suburbs down to Coringal, and the most expensive areas in Wagga Wagga are around through this area here, which is very interesting around the lake. So the geography of this was difficult for us to solve. Usually it does flow outwards, but in Wagga Wagga we had to really take our time to digest the layout of this area. Guys, hopefully this research, this type of investigation has been useful for you. I'd love to hear your feedback. In summary, Wagga Wagga, excellent opportunity. This is a long-term performer. We know that over the next 10 years, this is really going to start kicking goals. If we had to buy a property right now, probably we wouldn't pick Wagga Wagga. We'd find another area with the same type of opportunity, but it's in the buying window. The buying window in this area has been closed for 3 months. As you can see, the heaters pulled out of this market, even probably a little bit longer than that. You would argue that you wouldn't have purchased here probably even a little bit earlier than that. There has been good deals. We have been fishing around this market since we left in bulk for the right deal, because we want to still invest in this market longer term. You know, if you can find the right numbers in this area, we can make it work. We would still consider this as a location. But as bulk, we've probably moved on from here in terms of it has hit the peak. It's now entering a consolidation phase. Now is the time to keep jamming rents up every 6 to 12 months based on this rental side demand. And when yields get up to 5.5% again, we might be starting to get back over onto the buy side. Thank you very much for your time. Remember, if you like this type of content, subscribe to the channel, hit the bell icon so you are notified of any future videos first, and click on the like button. It means a lot to us when we see that one being clicked. Thank you.